For our next session, a keynote special address by none other than Shri Ajay Kumar Choudhary, the Non-Executive Chairman, National Payments Corporation of India, NPCI. So thank you again for joining us. Please help me welcome on stage none other than Shri Ajay Kumar Choudhary.
I have been given the topic to speak upon Fintech, AI, digital payments, how they are shaping the future of finance. Esteemed members of financial institutions, academia, press and media, colleagues from RBI, NPCI, and industry, Fintech industry specifically, and distinguished guests. It is an honor to be present at the Global Fintech Fest 2024. As we gather here today, let us embrace the opportunity to collaborate, innovate, and shape the financial landscape in our journey for developing an inclusive and sustainable financial system. Together, we can drive positive change and revolutionize the way we interact with money and tech. I would like to begin by recognizing the significance of this gathering. The Global Fintech Fest has rapidly evolved into a critical platform for innovation, collaboration, and dialogue in the financial tech sector. Now, in its 5th edition, GFF stands as a cornerstone of communication and creativity and fintech industry. The theme of this year's fest, Responsible AI, Inclusivity and Resilience, directly addresses the difficulties and opportunities that lie ahead for all of us in the fintech industry. Steve Jobs once said, quote, "Innovation distinguishes between a leader and a follower," unquote. As we convene to deliberate and investigate the significant transformations that we are currently taking place in the fintech industry, I am reminded of this quote. We are not merely participants in this global conversation, we are the leaders who are influencing the very foundation of the financial world. We must approach these advancements with a sense of responsibility and inclusivity. By fostering a culture of responsible innovation, I will define it subsequently, that prioritizes ethical practices, embraces diversity, and strengthens financial stability, we can ensure a more resilient and sustainable future for the financial system in general and fintech industry in particular. The landscape of the financial system is witnessing profound transformation. Unlike anything we have seen before, tech is at the heart of the changes, reshaping how we think about finance, how we interact with financial services, and how we approach regulation and oversight. The convergence of AI, artificial intelligence, tokenization, blockchain, big data, embedded payments, quantum computing, digital currency, CBDC, and other emerging tech is opening up new possibilities. But it also poses significant challenges. We must address the associated risks with foresight and collaboration to ensure that these tech are used responsibly. Now, looking at the global fintech landscape to understand how it is growing globally, the journey of fintech has been nothing short of extraordinary. Globally, fintech investment reached USD 58.2 billion in just the second half of 2023, and the sector is projected to generate an astounding of 1.5 trillion USD in annual revenue by 2030, which will constitute 25% of global banking valuation. Asia-Pacific region leads this charge with the total fintech revenue at USD 90 billion in 2022, just the second region after North America, with the projected growth of 27% and poised to take the #1 position in region globally by 2030 in revenue generation. Latin America and Africa is also not far behind. They are following this with impressive growth rate of 33% and 32% respectively. With policy support and tech advancements, the future of fintech looks promising for both investors and consumers alike. The global fintech landscape is as diverse as it is dynamic, from embedded finance to decentralized finance, from integration of AI and ML to DLT and tokenization. The innovations are endless. These technological advancements are not just redefining financial services, they are reimagining the future of finance itself. As the industry continues to evolve, the right mix of both competition and collaboration between the fintech entities and traditional incumbents, I mean banks, may be essential to drive innovation as also its adaptation. By leveraging their respective strength and meet the evolving expectations of customers. The market force will ultimately determine the area of focus for each dynamic, I mean which area one should collaborate and which area one should compete. Now, look at the fintech in India. India, known for its dynamic and swiftly evolving fintech ecosystem, it is at the forefront of this global transformation. India's fintech sector is projected to expand from USD 110 billion to an outstanding USD 420 billion over the next 5 years, with a compound annual growth of 31%. Further, our nation is third globally in terms of the number of fintech companies, with more than 9,000 entities at this point of time. Additionally, we have an adoption rate of 87%, which is significantly higher than the global average of 67%. The transformation of India's fintech sector from an emerging market to a global powerhouse has been nothing short of extraordinary. Initiative by way of DPI, like UPI, Jam Trinity, Jandhan, Aadhaar, and Mobile, and now ULI, Unified Lending Interface. Institutional support, supporting policy framework from government and regulators, and tech capabilities are helping the driving a revolution in fintech innovation in India and playing a crucial role in fostering an environment where fintech and fintech entities can thrive and continue to drive inclusive growth. India's journey in the fintech is a story of vision, resilience, and adaptability. It is a journey that began with small steps but has now reached a point where we are setting global benchmarks. The success of UPI, which recorded over 14 billion transactions, I'll repeat, the success of UPI, which recorded over 14 billion transactions with value amounting over rupees 20 lakh crore in July 2024, is a shining example of how tech, when combined with policy support, can transform the financial landscape. UPI has not only simplified payment for consumers, but also has empowered small businesses, enabling them to access a wider market and grow the enterprises. Similarly, the Aadhaar-enabled payment system, AEPS, what we know as, has revolutionized financial landscape in India and especially the inclusion. With over 1.3 billion Aadhaar cards issued, we have created the world's largest biometric identification system, ensuring that even the most marginalized sections of our society have access to basic financial services. The Jam Trinity, Jandhan, Aadhaar, and Mobile has further accelerated this process, bringing banking services to the doorstep of millions of Indians who were previously excluded from the former banking system. If we may look at financial inclusion from the lens of access and more access, these enablers have truly revolutionized financial inclusion in India. The impact of these initiatives on India's economy have been profound. Digital payments have reduced the cost of transactions, increased transparency, and reduced the corruption. They have also paved the way for new business models, such as digital lending, which leverages data on cash flow to facilitate more inclusive and accurate underwriting to MSME and small businesses, which empowers them to grow and thrive in a competitive market. Today, India is home to over 30 fintech unicorns, and this number is expected to grow. People speculate that it may be more than 100 by 2030, driven by the promise of a digital-first economy. The rapid growth of the fintech industry in India has also attracted significant investment for both domestic and international sources. This trend is expected to continue in the coming years. India's leadership in fintech is also evident in the international arena. The launch of UPI Pay Now linkage between India and Singapore is a testament to the potential of cross-border fintech collaboration. This initiative enables real-time, low-cost remittances between the two countries, which is benefiting millions of workers, students, and businesses. As more nations look to replicate this model, as Governor Reserve Bank of India yesterday mentioned, India is well positioned to support the development of a global digital payment network. The success of this initiative could revolutionize international money transfer in a more efficient and cost-effective manner, creating a more interconnected world. Under the Global Digital Public Good Initiative, our vision is to support building a robust fast payment system globally and connect the world through sustainable, equitable, and inclusive payment corridors and technologies. NPCI International Payments Limited, our wholly owned subsidiary of NPCI, is at the advanced stage of extending UPI and RuPay card arrangements and its linkages with India in various other jurisdictions and entities, including those of UAE, Qatar, entities in France, Namibia, Peru, Bhutan, Sri Lanka, Mauritius, Nepal, etc., etc., and etc. Now, we can touch upon some emerging tech. Application programming interface, what we know as API, and cloud computing are some of those new tech which are already being used widely by a significant number of incumbent banks as well as the fintech entities. As we look ahead, several emerging tech stand out as a driving force of the future of fintech. Artificial intelligence and machine learning are already transforming the way financial services are delivered, offering personalized experiences, predictive analytics, and enhanced decision-making support capabilities. DLT, distributed ledger technology, including blockchain, is reshaping the way we think about transparency, security, and trust in financial transactions. Embedded finance, where financial services are seamlessly integrated into non-financial platforms, is expected to drive significant growth. Looking ahead, quantum computing, tokenization of financial assets, unified ledgers, interconnection of financial ecosystem, which is popularly known as Finternet, as advocated by our Mr. Nandan Nilekani, launch of digital currency at population level, and many more such tech represents the next frontier in financial innovation, promising further enhancement of efficiency, inclusivity, and affordability of global finance. This may also help in unlocking the growth potential of the economy of any jurisdiction. In coming years, the fintech innovation will be particularly impactful in the B2B and B2B2X space. What we have witnessed last 5 to 6 years, the innovation primarily was driving the payment sector specifically. Now, it will be very critical for B2B and B2B2X space, where small and medium-sized enterprises, SMEs, have a USD 5 trillion credit gap waiting to be addressed globally. Let us now delve deeper into the transformative potential of AI/ML, because it's a topic of this theme of this fintech. The AI/ML tech significantly increases operational efficiencies by automating processes, enhancing accuracy, and ensuring consistency across financial services. AI-driven tools offer new personalized financial products and services tailored to individual needs, leading to better credit experiences. Moreover, AI's superior pattern recognition capabilities are transforming risk management by effectively managing large, unstructured data sets. This allows for improved fraud detection, money laundering prevention, and a deeper understanding of behavior pattern for more accurate underwriting. As regards quantum computing, though it is still at very nascent stage, it holds the potential to solve problems that are currently beyond the reach of classical computers. In finance, this could mean optimizing trading strategies, improving portfolio management, and enhancing encryption methods. As quantum tech matures, we can expect it to unlock new possibilities in fintech and pushing the boundaries of what is achievable by using quantum model fintech application can improve asset classification strategies, risk management, investment portfolio opportunities, optimization, and strengthening the financial decision making. Now, when we talk about a lot of opportunities and the way the immense opportunity and possibility is opening up the new tech, possibly we have also look at the challenges associated with all this new tech. As is apparent, fintech innovation bring out a lot of benefits, as I mentioned. However, new tech innovations can create new vulnerability. I'll underline. New tech innovation can create new vulnerability and also amplifying existing risks to the banks, their customers, and financial stability. These includes strategy risk by way of adjusting incumbents bank, incumbent banks' business models to increasing digital environment, as also their potential partnership and competition with fintech entities. Potentially, this heightened reputational risk, larger number of factors, testing operational resilience and operational risk, issue relating to data governance, etc. The system-wide risk may also be there due to greater interconnection nodes across the financial entities, heightened degree of contagion in times of stress, and amplification of pro-cyclical behavior. As regards risk specific to AI/ML, they may inter alia include challenges in data governance due to use of high volume, higher velocity, and different variety of data, issue relating to explainability of the model outcomes, model biases, and increased third-party dependency leading to concentration risk. Similarly, tokenization and unified ledgers, though create new opportunities, they may also raise system-wide risk due to greater interconnection of nodes across financial system and concerns on single point of failure. Likewise, embedded finance may expose non-financial firms to financial risk and regulatory scrutiny. The financial entities, they may also pose risk. Till now, I talked about the technology. Now I'm talking about the entities, which are supplier of these fintech solutions. The fintech entities, they may also pose risk by way of market and business conduct, including issues related to consumer grievance redressal, concern on financial integrity, data privacy, operational resilience, enhanced cybersecurity, and financial stability. The challenge for regulators and industry leaders alike is to strike a balance between the fostering innovation and managing these risks. This requires a robust governance framework that prioritizes customer centricity, transparency, and accountability. I think this is the right time to quote Steve Jobs. He once said, "You have got to start with the customer experience and work backward to the technology," unquote. In the context of fintech, this means placing the needs and interests of customers at the heart of innovation. A customer-centric approach combined with a strong governance and ethical standards will be crucial to navigate the complex landscape in fintech. On the issue of good governance, it is glue to all systems and processes and essential for a sustainable fintech ecosystem. It is expected to ensure accountability, fairness, transparency across all its operations. A robust governance framework is essential for managing risk, fostering trust, and maintaining the integrity of financial system. It provides the necessary checks and balances that enables an organization to navigate the complexity of the digital age while aligning its operation with ethical standards and regulatory requirements. Within this broader governance framework, data governance also plays a critical role in safeguarding one of the most valuable assets of this date is the data. To mitigate these risks, robust data governance arrangement and enhanced security protocols are critical. This requires ensuring that data is collected and used transparently, that informed consent is obtained from customer, and data is stored securely. Moreover, companies should adopt privacy by design principle, embedding data protection measures into their system from the start, rather than as an afterthought. Further, both the incumbent banks and fintech entities may mitigate specific tech-related issues by enhancing controls and ensuring, I'll repeat, by ensuring that human judgment remains the core part of decision-making, risk management, and governance arrangement. Now coming to the aspect of the regulation, one of the key regulatory challenges in the fintech space is balancing the need for innovation with the managing risk. Achieving the balance is the key for allowing innovation that can provide benefits to society without compromising the soundness of the financial system. Thus, as I always mention, the sustainable finance world would not depend on how the regulators design the regulation for fintech entities. It would largely depend on how the fintech sector balances its own wants against the need of customer centricity and good governance. In this context, the role of self-regulatory organizations in the fintech ecosystem cannot be overemphasized and overstated. These industry-led bodies may set standards, may promote best practices, and may monitor compliance within the sector. They may also act as a bridge between a fintech entity, regulators, and consumers, and may proactively monitor the developments in the fintech ecosystem. This may help in achieving the objective of sustainable fintech ecosystem. I understand that RBI has already provided permission to one SRO yesterday, and I believe many more will come. Now coming to the international coordination, it is critical to manage the risk associated with bigger fintech entities, particularly those who are having the cross-border operations, as well as big tech entities. The growing need of harmonized regulatory framework is essential to address challenges related to risk from the scale, concentration risk, contagion risk, and enhanced risk on data privacy, cybersecurity, and financial integrity. Collaboration between regulators across border will be crucial in managing the risk associated with such entities. Now, before concluding, I may like to touch upon something which is emerging as one of the biggest risks for the financial system, that is the financial crime and the fraud. Financial crime and fraud have emerged as a global menace with over $3 trillion in illicit funds flowing through the financial system in 2023 alone, fueling crimes like drug trafficking, human trafficking, and terrorism. These crimes not only threaten the stability of the financial system, but also have profound social impacts, exploiting vulnerable populations and undermining economic stability in any country. In India, the situation is equally alarming, with cyber crimes happening of over rupees 1,750 crore in the last 4 months of 2024. The increasing sophistication of frauds, often leveraging AI and cryptocurrencies, poses significant challenges. Criminals have adapted quickly to the new defenses, utilizing tech like deepfake fraud and human-operated ransomware attacks to perpetrate complex scams at minimal cost. The role of money mules further complicates these efforts, adding layers of difficulty in tracing illicit funds. The need for robust measures to manage this risk have never been more critical. NPCI has been at the forefront of these efforts, implementing a comprehensive cybersecurity framework and leveraging advanced technology like machine learning and artificial intelligence to detect and prevent fraud in real time. NPCI has taken initiative, including the real-time fraud risk monitoring and management. I'll repeat, real-time fraud risk monitoring and management, what we call as FRM, solution, and public awareness campaign, which are pivotal in safeguarding the financial ecosystem. Further, I know the multiple initiatives are being taken by multiple institutions. A pilot is also being run by our NPCI on identification of mule accounts, and banks are now being sensitized on the outcome of these models. They are very promising outcomes, and I'm sure they'll be very useful in identifying the mules and alerting the banks in advance in coming days. However, as financial crimes continue to evolve, it is essential to not only embrace new technology, but also strengthen cooperation and create awareness among all stakeholders. The collaborative approach is necessary to protect the integrity of our financial systems. In conclusion, by leveraging technology, embracing alternative data, and adopting customer-centric approach, the fintech sector holds immense potential to transform the global financial landscape. However, realizing this potential will require a collective effort. As incumbent banks, fintech industry leaders, regulators, and consumers, we must work together to build a financial system that is inclusive, efficient, responsive, and resilient. The journey ahead of both exciting and challenging. We are at a pivotal moment in the evolution of finance, and it is our responsibility to ensure that the entry barrier to financial services is further reduced, are more accessible, and financial services generate the responsible innovations and lead the economic growth, and risk are managed in a way that protects the stability of the financial system. Let me leave you with a thought from the Peter Drucker, who once said, quote, "The best way to predict the future is to create it," unquote. Decision we make today, the innovation we embrace today, and the risk we manage will save the future of finance for generations to come. Thank you. Now, I think my target was to finish it in 25 minutes. I completed it. Now I'm open to questions relating to this aspect only. For another 5 minutes, if any question, I'm happy to take that.
Hello, sir. Kavya from Entrepreneur Magazine. Sir, I just want to know, in your experience looking at the changes in the fintech space, what are some startups that you feel are really like being bullish in their approach, or you have your eye on for bringing in further changes to the sector?
Whenever I meet fintech and fintech startup and their leaders, actually, it's very exciting because it's a learning experience always. Very, very sharp mind and very encouraging, actually, the way their thought processes and the way they want to see the changes, actually, in the financial landscape, as well as the globally how it can be done. As well as they are driven by wonderful tech backings. So it's a bright mind backed by technology. Is a wonderful combination. Possibly what they need, sometime, some of the entities are balancing the need, right, of today with the wants of tomorrow. So that is the main thing, and that basically requires, I mentioned it very clearly, that some dose of customer centricity, some dose of governance, and some dose of sensitization on regulatory requirement and expectation, if not requirement, expectations. So those things are, if taken care of, I believe that these opportunities are immense and they can grow in India or anywhere else.
Thank you, sir.
Thank you.
Yeah. Yes, sir.
Hello, this is Farid from Airtel Payment Bank. Just like the expansion done on the rails of UPI for Singapore, where all do you think that the next set of expansion can be done where the UPI rails can be used and the payments, as far as convenience are concerned, can be enabled across other parts of the globe?
I mentioned few names here, and at the end I have told etc. and etc. Idea is just to facilitate wherever possible and wherever the requirement is. That NPCI is more than willing, and possibly Government of India is also supporting, along with the regulator support, that we want to go anywhere, we can go anywhere, and provide them all support so that they can develop their own fast payment system if they need it, as well as how to interconnect them to Indian fast payment system. So that basically we are ensuring. Specifically the Global South, our thrust is on this. But you are aware that we are also going to Europe, the Eiffel Tower, France, and Lafayette at France, and we are also moving to the South America and these European countries. It's an endless thing, and we believe that we have the potential to support the developing the global payment ecosystem seamlessly.
A quick follow-on question. What other things that you think can be done along the UPI rails? Let's say typically credit card, credit line, which is, let's say, personal loans. What else do you think can be enabled through the UPI rails? And also applicable globally?
You must be amazed that every fintech this fest, we come out with 2 or 3 new features actually, and come and get it launched. Today also some few more features will be launched actually by Deputy Governor, Reserve Bank of India. Yesterday few things were launched by Governor. And potentials are immense depending on the specific requirement, evolving expectations from the customers, right? Exactly what they need, because this requires the understanding the customer journey and understanding that what they need. And accordingly, our endeavor is to provide these expectations and meet those expectations in at the earliest possible in a seamless manner. That is the way possibly we are looking at it. And it's not ending with the UPI, because you have to integrate with the CBDC, we have to integrate with the tokenization, we have to integrate with interconnection of the all financial ecosystems, and think of digital asset management in future, and where the payment system basically will enable the transaction, monetize this settlement by way of digital currency, etc., for against the digital assets. So all those things, next 5 to 6 years looks very, very exciting. I believe Nandan has yesterday spoken about the Finternet. That itself is a very exciting concept. And if we achieve even 50% of that, that will be a great, I believe. I believe that next 5 to 6 years will be quite challenging, and whatever we are doing today, we are going to reshape actually the entire financial landscape of the country and the globe. And we are leader in that.
Thank you. Thank you for your time.
Hello, sir. This is Abhijit Patil from Adarsh Credit Society. I want to know more about the ULI. Can you shortly prescribe us what ULI and when it is going to come up?
ULI is, earlier Governor has mentioned that it was an integrated tech platform for frictionless credit, right? ITPVF. It was announced by Governor in August 2023 monetary policy, right? And we had started pilot from that day. This is with the renaming of them as a ULI and possibly giving them certain more impetus by adding more services, by adding more states under this umbrella of this ULI. I believe that it's a game-changing situation, in the sense that in the lending side, any lender, actually, borrower can approach the lender on the app or assisted mode, and the lender can get all the information required to facilitate them to underwrite the borrower within few seconds. And if that is possible, they can reach a decision through this platform, what we call ULI platform. It's again the digital public infrastructure. Means anybody can plug in and get all information in a seamless manner. And once it is done, then you can decide whether loan can be given or not. If it can be given, they can be communicated within few minutes, and possibly it can disburse within few minutes. We have demonstrated that, means RBI has demonstrated that in case of dairy, in case of agri loan up to 1.6 lakhs, because it was collateral free, and MSME loans, those loans were disbursed within less than 5 minutes. So it's a phenomenal thing. The way it will scale, actually, it looks very exciting. Possibly next one or 2 years, all the frictions possibly, specifically for the small ticket loans, will be reduced.
Thank you. Thank you very much.
Yeah, thank you.